Introduction to Dow Jones Index Prediction. The Dow Jones Index is a widely followed stock market index that represents the overall performance of the U.S. stock market. Predicting the movement of the Dow Jones Index can be challenging but also highly rewarding for investors and traders. In this tutorial, we will guide you through the process of predicting the Dow Jones Index step by step. Understanding the Dow Jones Index. The Dow Jones Index is a price-weighted index that consists of 30 of the largest and most widely traded stocks in the U.S. The index is calculated by adding up the prices of these 30 stocks and dividing by a divisor that is adjusted for stock splits and dividends. To predict the movement of the Dow Jones Index, you need to have a good understanding of the U.S. economy and the performance of the individual stocks that make up the index. Key concepts in Dow Jones Index prediction. There are several key concepts that you need to understand when predicting the movement of the Dow Jones Index. These include technical analysis, which involves studying charts and patterns to identify trends and predict future price movements. Fundamental analysis, which involves studying the financial statements and performance of the individual stocks that make up the index. Economic indicators such as GDP, inflation, and unemployment rates, which can have a significant impact on the performance of the U.S. stock market. Practical examples of Dow Jones Index prediction. One way to predict the movement of the Dow Jones Index is to use a combination of technical and fundamental analysis. For example, you can use moving averages and trend lines to identify trends in the index and then use fundamental analysis to determine whether the trend is likely to continue. You can also use economic indicators such as GDP and inflation rates to predict the overall performance of the U.S. stock market. Best practices in Dow Jones Index prediction. To be successful in predicting the movement of the Dow Jones Index, you need to follow several best practices. These include staying up to date with the latest news and developments in the U.S. economy and stock market, using a combination of technical and fundamental analysis to make informed investment decisions, diversifying your portfolio to minimize risk and maximize returns, and continuously monitoring and adjusting your predictions as new information becomes available. Conclusion. Predicting the movement of the Dow Jones Index can be challenging but also highly rewarding for investors and traders. By understanding the key concepts and using practical examples and best practices, you can make informed investment decisions and achieve your financial goals. Remember to stay up to date with the latest news and developments and continuously monitor and adjust your predictions to ensure long-term success.